Greetings, members one and all of the Salivation Nation. Are we in for a prolonged bear market for gold? Let's explore! Gold. It is a metal that is starting to lose its luster slightly in terms of the markets anyway. The price, we've seen it go down fairly substantially over the past couple of weeks here. There are those who believe that we could be at the beginning of a bear market. And we're going to be referencing an article here from Seeking Alpha that talks about this. You've heard that term taper tantrum. We see that there is this fear that we might see the Fed start to tighten a little bit. In other words, to taper back its bond buying program here. And, gold does continue to struggle to make headway. It's bogged down by the gold futures speculators, and they're kind of skittish on buying too, because they fear serious downside from expected Fed tightening. We've been talking about that for a while, but remember, that wasn't that long ago when we said that they're not going to do anything, not a single thing, until the end of 2023. I still believe that's the case. There is fear out there, and that's why you're seeing some of this selling. It unleashed periodic bouts of heavy selling, hammering gold in the process, and it feeds the bearish psychology, ramping worries about the immediate threat of another gold futures taper tantrum. Now, the original one, it wasn't called taper tantrum back then, but it occurred back in mid-2013, and its brutal impact on gold is infamous. The Federal Reserve was getting ready to start winding down its third quantitative easing campaign in early June that year. Total QE3 money printing had run $545 billion by that point, adding on to QE1's epic $1.750 billion coming out of late 2008 stocks panic, and QE2's $900 billion. QE3 was still running full bore at $85 billion per month. Now here we are in QE4 to infinity, it seems like. In mid-June 2013, the Federal Open Market Committee met for one of its 8 meetings each year. The actual FOMC statement that day pledged to continue monetizing U.S. Treasuries and mortgage-backed securities at that $85 billion monthly pace. But in his post-meeting press conference, then Fed Chairman Ben Bernanke laid out a vague timeline for gradually ending QE3. The taper tantrum resulted, crushing gold. The U.S. dollar index soared 2.9% over 6 trading days on the prospects of the Fed gradually slowing its blistering money printing. Gold cratered 10.4% during the exact span and extended slightly to 8 trading days. Gold collapsed 13.4%. It felt like the end of the world for this leading alternative investment. Well, and I don't see it as an investment. It is really a hedge against economic instability. But it's fascinating to read this history and what happened then and what could occur again. Gold limped out its second quarter for 2013 with a horrific 22.8% loss, making it the worst quarterly performance in 93 years. So when you think about this and the recent news that I talked about with a BlackRock fund manager selling almost all of his gold holdings, by the way, and I mentioned that in that video, if you watched it, that means that it's mainly in the ETFs, paper gold. Look at the amount of gold that was sold. They added to the equivalent of 202.4 metric tons of gold selling. And so there it is. That was the backdrop. Now it's talking about the fears of QE4 tapering starting soon. Broadening out general federal tightening are the whole reason gold has been struggling since mid-June 2021. The extreme leverage these guys run makes gold futures trading the tail that wags the gold price dog. And 21 times each dollar of gold futures selling exerts the same downside gold price impact as $21 of outright investment selling. So gold is often at the mercy of the futures market. We talk about that, and that's why many people feel it's rigged against the gold, But that is with every commodity. And again, there's short-term manipulation back and forth in order for people to profit. That's what it's all about. It's frustrating to that extent. But I believe this is somewhat short-lived because what do we have that's different now than was in 2013? Well, when 2011, we saw gold climb up. Gold climbed up to $1,921, if memory serves me correctly. In August of last year, 2020, we saw gold climb up past $2,050. So nominally higher price, but not adjusted for inflation. It didn't get quite as high. But nonetheless, there's a lot of things different now than there was back in 2013. We didn't have a pandemic or the fear of the pandemic. And really, that's kind of the difference. Again, remember, you hear me talk about this a lot on this channel. Psychology plays a huge role in the markets. Perception is reality. And that is the case in the financial markets. They're very fickle. And so therefore, when you go to buy one of these gold eagles, you are doing it and buying it with the premiums attached to it as a way to preserve your wealth. You're willing to pay that premium that you won't get back unless it's gobbled up by rising cost for gold and silver in the markets. We know that as an inflation hedge, physical gold is probably the best way to own it, and people are less likely to sell that than they are futures or ETFs. I don't think that this prolonged bear market will go on because there's going to be other things that are going to be happening in the economy, which is extremely fragile right now. It's not just here in the United States, but it's around the world. Around the world, there are issues with modern monetary theory, massive quantitative easing around the world. The U.S. dollar is only surviving because it is the top world reserve currency, and it is even under stress right now. I believe now in 2021, especially, the United States is in a weakened state geopolitically, and so therefore it gives the advantage to some of those other nations to try to separate themselves and work with each other or other nations in terms of buying oil and the like. And that's going to bode well for gold, especially when we know that some of these nations are adding gold to their reserves at a record rate. So I don't believe that we are necessarily in for a prolonged bear market, even though we may see the price go down in the short term. I believe that maybe even before the end of the year, we'll see it recover somewhat. And even as such, even though the price is down, it's not down by a whole lot. And by the time you see this video, it could already start climbing again. We know how the markets work from day to day. It could spike up, $50 as you see this video, or it may be down another $50. Who knows? But nonetheless, I believe the fundamentals are strong for gold, and that's what it's about. So there's ways to be able to invest in gold in different ways and different aspects because gold does not pay a dividend. In fact, holding the physical does have its risks. There are risks in holding physical, especially when you talk about premiums. There are ways to be able to invest in gold and gold companies in order to do well. And we're going to talk about ways to be able to invest in royalty companies. And this is a little slideshow that I thought was pretty interesting that shows some of this, of what happens, of the ways to invest in the gold space. Physical gold bullion, jewelry, coins, gold-backed investment products, gold stocks, and more. Precious metal space also has these royalty and streaming companies. What are these royalty companies about? A precious metal royalty company serves as a specialized financier that helps fund exploration and production projects for cash-strapped mining companies. In return, it receives royalties on whatever the project produces, or rights to a stream, agreed upon amount of gold, silver, or other precious metal. And they are smart money of the gold space for a number of reasons. For the first reason that royalty companies is smart is because they have a robust business model that allows them to potentially generate revenue when the price of gold is both rising and falling. The price of gold and precious metals can be highly volatile, which is why royalty companies get fixed prices for mining output. In some cases, the royalty names have outperformed both the price of gold and gold miners. So that is a strategy to consider if you are really into precious metals and want a new way or a different way to invest in that space. The second reason is royalty companies aren't operating mines themselves. They aren't responsible for huge infrastructure and operating costs. They've also taken on very little debt relative to producers, making them better allocators of capital. That's a very good reason. So they don't have that investment into it. It's just about helping them get off their feet, getting returns off the royalty. Royalty companies, for the third reason, tend to have high revenue per employee. Again, because they don't incur the cost of running the mines themselves. They have some of the highest revenues per employee of any type of company in the world. And that is certainly a great asset for sure. And the fourth reason is miners are highly dependent on their own projects to generate revenue, but royalty companies hold highly diversified portfolios of mines and other assets, so they're very well diversified within themselves, helping to mitigate concentration risk in the event that one of the properties stops producing precious metals. So when you own shares of a royalty company, an investor has exposure to several other companies through royalties and streams of metals. And we're going to be talking about that very thing with Gold Royalty Company. Gold Royalty Company is sponsoring this video, and they have an excellent business model that talks about this, and they are certainly growing at an incredible rate, and that's going to be part of what this video talks about in the sponsored portion here. Gold Royalty Company was founded by Amir Adnani, who you may remember was the founder of Uranium Energy Corporation and Uranium Royalty Corporation. And they are, by the way, you may remember I profiled that company not too long ago, and they are up by 75% in the past month. They're up 96% in 2021 and a whopping 580% since the March 2020 bottom. We saw a lot of commodities get hit that year. These two companies were founded by Amir Adnani. Uranium is essentially the sister of GROY, and that's their ticker symbols, UROY and GROY. So everything that just happened to UROY can replicate itself with GROY, Gold Royalty Corporation. If gold catches a bid to $2,000 and above, now, as of the recording of this video, gold is down substantially. Nonetheless, this is the opportunity to actually get in when the prices are low. We can see how these high-quality royalties are positioned for growth with a balanced portfolio. As you talked about, one of the benefits of a royalty company is their diversification and all these different projects in North and South America here. So the whole hemisphere of these sites, we can look and see who's involved, what other partners and some of these key assets that we're involved. Newmont and Gold Corp merged a couple of years ago, and what is the largest corporate merger in the gold industry history, a $32 billion deal. The CEO of Gold Corp, the mastermind behind this deal is David Garofalo, who is now the CEO of Gold Royalty Corporation. And so there's your tie there, and that's it's the people, the management and board that makes this so special. And Eric Sprott is also a big shareholder in the company, but we see David Garofalo, who was the former president of Gold Corp and merger with Newmont, and he is also the CEO of Hud Bay Minerals and the former SVP Finance and CFO of Agnico Eagle. We know Amir Adnani, who's an entrepreneur, founder, and president and CEO of Uranium Energy Corporation, chairman of Gold Mining Incorporated and Uranium Royalty Corporation, and been very successful. But also, this gentleman here on the advisory board is Ian Telfer, and he's the chairman, and he was the former chairman of Gold Corp and the World Gold Council. And so the World Gold Council is where we get a lot of data from about gold. And so he has certainly clout in this regard. And he led Wheaton River, Wheaton Precious Metals, and Uranium One. So it is fascinating to see the people that are involved in this company here. And you can see the health and the growth. There's a significant re-rate potential growth here through scale, portfolio quality, and growth. And you can see all the different factors here that come into play. Peer leading positioning here. These charts really show kind of where they are at. Total number of royalties. The gold royalty is up. I mean, look at that, 191. Just amazing to see all of the different ways that they are connected to these projects. And we can see here's an example of some of the projects that they have with some of these mining sites that are out there and their involvement in them. The company is generating revenues from several of its royalty agreements with dozens more in development, as you can see from the growth here. The rate at which they're growing is quite astronomical. It's already merged with Eli Gold and TB and Golden Valley this year. And so they really are building a giant company. Gold Royalty Company is a business model that has certainly shown itself to already be proven in the sector of royalty companies that are out there. But as is with any company that is growing and looking to invest in other exploration sites, there is some risk involved. And I would encourage you to do your due diligence and research further on this company. I will post a link to their website and information below. I encourage you to check it out. And if, again, as is always the case, you can always request information or contact them on their website to be able to get further information and details if this is an area that you're interested in. It's fascinating to see how many different ways that you can invest in the gold sector, as well as stacking the physical. It's nice to see that broad range. And where gold is going, I don't believe it's in a prolonged bear market, even if we have it for the short term. And by the way, I believe short term can be anywhere between a couple of weeks or a couple of months. I am bullish on gold overall, and I believe it's going to bode well for companies like this. And I believe this is why we're seeing more and more exploration companies looking for precious metals. So there you have it. Let me know what your thoughts are in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.